We've got drill down earnings results out from Hewlett-Packard, HP, what the company goes by now. I'm Cory Johnson. I've been covering it since it was Hewlett-Packard. I remember why the Q was there, part of Compact Computers when that merger happened long ago. This is one of the 50 most important companies in technology. One of the biggest companies in selling computers in the world. And so that's one of the reasons we pay attention to this important company. I'm the chief market strategist for Epistrophy Capital Research. And when we look at this company, Wall Street looks at a beat or a miss, and at $13.1 billion in revenues and 80 cents in earnings per share, the company doing a little bit better than those expectations, specifically showing $13.2 billion in revenues and 71 cents in adjusted earnings for the quarter. So earnings per share worse than expectations, revenues a little bit better. Revenue growth constrained. 3% growth is good for a business that wasn't growing for the longest time, but I'm just going to say not a great quarter for this company. So profitability is slipping down to 4.9% in terms of operating margins here. And this business is interesting, and I've been studying this business for a long time, and I spent a bunch of time on the charts for this, so I hope we're watching this on Spotify and YouTube, not just listening to us on all the podcast platforms we're on. But I want to talk about some things that worked well and some things that didn't work well. But when you think about Hewlett-Packard's business, HP's business, you got to think about two things: computers and printers and supplies, ink and paper in those supplies. Those are the two businesses that have long comprised this company. So AI-driven PCs, they saw a strong demand for that. They say that's now their fastest growing portion of their personal systems. They call them systems, they don't call them computers, they call them commercial personal systems, consumer personal systems. I'm gonna call them personal computers because I'm old. All right, they said that their goal for AI PCs is gonna be 25% of PC revenue by year end. And the ASP is the average selling price for the AI PCs is a lot more expensive, 10 to 25% more than the regular PCs. So that makes them happy because they see profitability. They're also going to be selling a Blackwell workstation. They're going to have an NVIDIA chip in a workstation. So we hear about Blackwell and these giant data centers and you know, this notion of having a computer at your desk that runs Blackwell. Well, they're launching that targeting data scientists and AI developers with high performance and security centric features, which they're very excited about. But their commercial PC revenue up 9% year over year. North America strong, Asia strong, which is interesting because we keep hearing about concerns in the marketplace about what tariffs mean, about what the economy means, what uncertainty means from corporate spending. They're seeing 9% growth, and they see in particular in the premium workstations and gaming stuff, they're seeing 11% commercial unit growth. So when I modeled this stuff out and I wanted to create some charts, I sort of try to take this in two ways. The green stuff is the printing and the printer supplies, paper and ink. The orange stuff is the PCs. So stick with me here. So what you saw very different growth trajectories from those businesses 2 years ago, kind of in the couple of years after the pandemic. Those have all narrowed down to single digits up or down in any given year over year. Now the commercial segment, as I mentioned, they're growing at 10% on a year over year basis. Consumer, however, is coming down 7%. And we've heard about pressure on consumers, inflation hitting consumers, and you can see that in these PC sales as well. Now, the market did not like these numbers. The stock sold off big time, closing down 7% in after hours trading, and that's after losing 16% in the last year. So a bad year, a bad quarter, a bad trade, a bad day, followed by a bad year for HP. But the big takeaway I want you to have from this business, that while 2/3 of the revenue is from selling PCs, and only 1/3 is from selling printers and ink and paper, fully 2/3 of profits are from selling ink and paper and printers. Just 1/3 of the profits from the PC business. So the printing business is very profitable, the PC business less so, but they feel like they've got to be in both of those to sell each of those. Now, I want to mention tariffs again. Now, tariffs, they say really hurt them. They say it cut 12 cents from earnings per share. It lowered their non-GAAP operating margins by 100 basis points. They are now shifting all of their North American bound production out of China, and they expect it to be done by June to mitigate future impacts. But we don't even know what those tariffs are going to be because of the kind of chaos coming out of the White House with the taco, right? Trump always chickens out. That's the trade on Wall Street. Well, these guys went for the other trade. They're going to bet the tariffs are going to last, and they've got to make some adjustments as a result, and they're making those changes, moving production out of China. Here's CEO Enrique Lores.
In terms of print, what we have seen quarter on quarter is that pricing has been more stable. So we haven't seen an improvement of the pricing environment, but it has stayed stable versus what it was a quarter ago. And during the last weeks, most of the print competitors announced price increases related to the changes in the trade environment. So this will be reflected in the overall pricing environment in the market in Q3 and in Q4.
So yeah, I think the pricing environment's going to get better. They're going to fix some costs by moving that production out of China. But what's it all mean? What's your big drill on earnings takeaway? And what's the one thing I want you to remember about this quarter? Well, HP Q2 earnings, their essential summary, your drill on earnings summary, tells you that you had $13.2 billion in revenues. Yes, you had 71 cents in earnings per share on a non-GAAP basis, but that's probably the right way to look at it right here. But I think the most important thing here is that their really profitable business of selling paper and ink supplies was down 5% on a year-over-year basis. So this is not something I want us to focus on too much, but I think it's a crucial part of this company because we know that printers and paper and ink are 2/3 of the profits from this company. When that business slips, all of HP slips, and I think that's why the stock is selling off as well. All right, thanks for checking out Drill Down Earnings. Subscribe to us. We'd like you to catch as much of our work here as you possibly can stand. I'm Cory Johnson.